Hello, good evening, everyone. Please confirm if I'm audible.
Hello, sir. Good evening. Yes, sir. You're audible.
Thank you, Alexander. All right, so we were discussing about the company account, and we did this question in the previous class, I guess. Question number 17. Alexander, could you please confirm which question number we did in the previous session?
Yes, sir. We have done till question number 17.
We did till question number 17. Okay. So I must have given you a question for the homework as well.
Sir, 17 was the home.
17 was the homework. Okay. So anybody having any problem with question number 17? No problem.
No, sir.
Anybody want me to do this question apart from Alexander?
Can you do this?
Okay, Evan want me to do this question. All right, Evan, just a moment. Evan, just tell me whether you tried this question or not.
No,
You
sir.
tried solving this? No. Why not? Why didn't you try? You should give it a try, at least. Anyways, let me read this question for you. This question says that Sandesh Limited took over the asset of 7 lakh and liabilities of 2 lakh from Sanchar Limited. So in this question, the name of the asset and liability is not given. So we will presume that the Sandesh is taking over the entire asset and liability of the Sanchar Limited. So this is basically a case of purchase of business for a purchase consideration of 4,59,500. So basically, Sandesh took over the asset and liability, and in consideration, Sandesh Limited paid Sanchar Limited 4,59,500. 8,500 were paid by accepting a draft in the favor of Sanchar Limited, payable after 3 months, and the balance was paid by issue of equity in favor of Sanchar Limited, passed. Okay, so let me first of all explain what this question is trying to tell us. Okay. So question is telling us that Sandesh Limited is taking over Sanchar Limited by purchase. So assets and liabilities. Liability of 2 Just a minute, everyone. Give me a moment. Yeah, okay. So I was saying that Sandesh Limited took over the asset of 7 lakh and liabilities of 2 lakh from Sanchar Limited, for which Sandesh Limited paid Sanchar Limited 4,59,500. So this is the consideration. 4,59,500 is the amount of consideration that Sandesh Limited paid to Sanchar Limited. Now see, pay attention, try to understand that if the total value of the assets were 7 lakh and the total value of the liability is 2 lakh, that means the net value of the asset and liability that Sanchar bought, net value after adjusting the liability with the asset is 5 lakh, right? Net value of the asset and liability is only 5 lakh. And that means Sandesh Limited bought total asset and liability from Sanchar Limited valuing 5 lakh, and for which the total consideration paid is 4,59,500. So that means this is a clear case of profit. We are having a profit. Asset of 5 lakh has been purchased at a consideration of 4,15,500, 4,59,500. That means there is a profit. There is a profit, right? And now see, question says that out of 4,59,500, 8,500 were paid by accepting a draft. 8,500 out of it 8,500 will be paid through bank draft after a period of 3 months. It says that a bank draft will be issued in the favor of Sanchar Limited, payable after 3 months. Payable after 3 months. Payable after 3 months. So we can say that 8,500 out of 49,500 will be paid by issuing bills payable. This can be termed as bills payable. Payment of 8,500 will be made to bills payable, and the remaining amount will be just a minute. 4,59,500 minus 8,500. Remaining amount is 4,51,000. So 4,51,000 for the remaining amount. For the remaining amount, company have decided, Sandesh Limited have decided to issue equity share having a face value of 10 each at a premium of 10%. So issue equity shares, face value 10 each, and premium will be 10% of the face value. Got it. This is how the payment will be made. I hope the question is clear, everybody. This is the question, which was the all about the question number 17. This is what is given in the question. Now we will pass the journal entry. So for that purpose, we'll write down journal entries in the books of Sandesh Limited. Debit side and credit side. So first of all, we will pass the general entry for the purchase of the asset and liability, and the general entry for that will be, tell me, sundry asset account debit, to sundry
liabilities
liabilities
to vendor Sanchar Limited.
to Sanchar Limited. Since the name of the vendor is given, to Sanchar Limited. All right. Now see, total value of the asset bought is 7 lakh. Total value of the liabilities were
2 lakh.
2 lakhs. And for this, the consideration amount was 4,59,500. So you can see that there is a difference, right? There is a difference arising. So the remaining amount will be transferred to which account? Tell me. Anyone? The difference arising will be transferred to which account? Anyone, please tell me.
Capital reserve.
Yeah, capital reserve account. Right. First of all, let's just find out the remaining amount, remaining value. Remaining amount will be
40,500.
Yes, that is right. 40,500. This will be credited to capital reserve. All right, this is the general entry for the purchase of the asset and liability. All right. Everybody got it? Is this clear?
Sir, narration will be being assets and liabilities taken over.
Yeah. You can write down the narration as being asset and liabilities taken over. Being assets and liabilities taken. All right. After this, we'll pass the journal entry for the payment. So, out of the entire amount of consideration, we will be paying 8,500 to bank draft, that is through bills payable. So for that, we can simply write down the journal entry as Centar Limited account debit, right? Centar Limited account will be debited to, for 8,500 we will be issuing the bills payable, right? Yes or no? So we can pass the journal entry as Centar Limited account debit to bills payable account. Bills payable. Got it, everyone? And for the issue of share, we will be passing the separate journal entry. This is the journal entry for the amount that we will be paying through the bills payable. And for the issue of share, you can pass the combined journal entry along with this, or you can separately pass the journal entry for the issue of share for the remaining amount. All right. All right, everyone. Is that clear? All of you? I'm
Yes, sir.
passing the journal entry for that separately. Pay attention, try to understand. For the remaining amount, we'll be writing Central Limited account debit. Central Limited account debit. This one, yeah. So we have issued a bills payable of 49,500, 8,500. Remaining amount due is, how much is the remaining value which is due? 4,59,500. Yeah, okay. So 4,10,000 is still due. So for that, we will be debiting Central Limited by 4,10,000. Will be the journal entry for the remaining part, everyone. To equity share capital. To security premium reserve. Security premium reserve account, or you can simply write down security premium only. Now the thing is that we know the remaining amount which is due toward Central Limited, but we have no idea about the number of shares being issued. For that purpose, we need to basically divide the total amount due with the face value along with the premium. So in order to determine the number of shares being issued, we will be preparing an extra working note. And wherein you can find out the number of shares. Applying this simple formula. 4,10,000 is the total amount due, right? Which will be paid through the issue of equity shares at a premium of 10%. So face value of the equity share being issued is rupees 10, having a premium of 10%, which is 1. So 4,10,000 divided by 11, we will get the number of shares as 41,000, I guess. Now you can simply put this value here, 41,000 into having a face value of 10. Just a minute. I think I'm making a mistake somewhere. Just a minute. Let me just subtract 4,59,500 minus 8,500 out of it. Okay, so total amount due is 4,51,000. Sorry. We need to divide 4,51,000 by 11. 4,51,000 by 11, and now you will get 41,000. And now you will multiply 41,000 by 10, and you will be getting 4,10,000. And remaining amount will be credited to security premium reserve account. So for that, we need to multiply 41,000 with 1. So this will be 41,000. This is it. This is how we will be passing the journal entry for this question. I hope this question is clear, everybody.
Yes,
What
sir.
is that? Okay. All right, and so guys, this was the homework question that I gave you in the previous question. Now I'm giving you one more question, and I want all of you to try this question. All right, noted, everyone. This is done. Shall we move to the next question quickly?
Done.
Yes, sir.
All right. So this was question number 17. Moving on to question number 18. All right. This is a similar question. We did a similar question in the previous class as well. It is almost similar to the previous question that we did in the previous session as well. I want you to try this question, all of you. I'll be asking for the answer. Just solve this question. Let me know the answer. I'm giving you 5 minutes to solve this question. Very quickly, let me know the answer. Done, everyone? All of you are still solving it? Please respond. Am I audible, all of you?
Sir, we haven't done.
You're still solving it, Alexander?
Yes, sir.
All right. All right, so let me tell you how we will solve this question. First of all, question says that Shaw Limited is purchasing the running business from Messrs. Rai Brothers for a sum of 15 lakhs, payable rupees 12 lakh in fully paid up share of rupees 10 each and balance with the check. Okay, so the entire business of Messrs. Rai Brothers is being purchased by Suresh Limited at a consideration of 15 lakh, for which the payment will be made partly by issuing shares and partly by way of check, that is through bank. Following asset and liability has been taken over by the Shaw Limited from Messrs. Rai Brothers. That contains plant and machinery, buildings, sundry debtors, stock, cash, and sundry credit. We need to pass the journal entries. Okay, so this one is easy. Let me show you how we will solve this question. First of all, we'll pass the journal entry for the purchase of the asset. And for that, the journal entry will be, first of all, we bought plant and machinery, right? So plant and machinery account debit. Building account debit. Then we also took over the sundry debtors. So sundry debtors account will also be debited. Apart from sundry debtor, we also took over the stock and cash. All right, and these were taken over at the value of 4 lakh. Then building also took taken over at 4 lakh. Sundry debtor took over at a value of 3 lakh, then 4 lakh and 3 lakhs. Right, and we also took over a few liabilities that include sundry creditors to sundry creditors account. Value of the sundry creditors were, let me check. Yeah, it was 2 lakh. Okay, and we have taken over all these asset and liability at a value of 12 lakh, right? We bought the entire 15 lakh at a value of 15 lakh. So, to Messrs. Rai and Brothers, Messrs. Rai Brothers account 15 lakhs. All right, understood, everyone? Now, we need to ensure, is there any difference arising on the debit part of the journal entry or the credit part? So when we will do that, we'll find out that the credit part is less than the debit part. Totaling the plant, machinery, buildings, sundry items, stock, and cash value, we will be. You will notice that we will be having a difference. 4 plus 4, 8 plus 3, 11. 11 plus 4, 15. 15 plus 3, 18 lakhs. 18, and then we have 15 plus 2, 17. So that means we have a gain here. We got the net value of the asset and liability. Net value of the asset and liability is only 14 lakh, and we 16 lakh, and we only paid 15 lakh. So that means we have a profit here, and profit is transferred to which account? Capital reserve account. Is that right, everybody? Yes or
Yes,
no?
sir.
So we have a profit of 1 lakh now. 4, 8, 3. Yeah. So we have a profit which will be transferred to capital reserve account. For that, I'll write down to capital reserve account. All right. And I'm sure all of you will be able to pass the narration for this journal entry. Got it? Is this clear, everybody? This is the journal entry for the purchase of the asset and liability. Now, we need to pass the journal entry for the payment of the consideration. And the question says that we paid the consideration by issuing fully paid up share of rupees 10 each for 12 lakh, and for the balance amount we issued check. So out of 15 lakh, Messrs. Ryan Brothers will be paid by the equity share for 12 lakh, and for the remaining part we will be making the payment by check. So the journal entry for this will be Messrs. Ryan Brothers account debit to equity share capital. So question, it specifically says that we will be issuing fully paid up share having a face value of 10 each, no premium this time. So 12 lakh will be paid by 10 rupees equity share of face value 10 each. That means we will be issuing how many shares? We will be issuing 1,20,000 shares.
1,20,000.
Perfect. Good job, Alima. 1,20,000 into 10. So
12 lakh.
it will be 12 lakhs. All right. So this is the general entry for the payment being made to Rai Brothers by issuing equity share. For the remaining amount, that means for the remaining 3 lakh, we will be making payment through check. So for that, the general entry will be Messrs. Rai Brothers account debit to bank account. This will be 3 lakh. This is the general entry for this question. I hope this is clear, everybody. Anyone having any doubt, please let me know. Eben, Alexander,
Narration.
you want me to write down the narration as well? Narration will be, you can, for the last one, you can simply write down being payment made by way of by check, being consideration amount paid through check, and here you can write down being consideration paid by issuing fully paid equity shares. All right, everyone, is this clear? All of you?
Done.
Yes, sir.
So this was question number 18. Evan, is that clear to you as well?
Yes, sir, it's clear.
All right. Okay, so I have one similar question again. I want you to try this question this time. This time we are making the payment by issuing the equity share at a premium of 20%, and also we will be paying the 10% of the consideration by way of check. So you need to solve this question. I'm waiting. I'm giving you 5 minutes. Try solving this question. Let me know the answer.
Sir, here we'll be taking the agreed value amount.
Yeah, we need to consider the agreed value in order to
Okay.
pass the journal entry for the purchase of plant and basically purchase of asset or liability. We need to consider the agreed value. Book value is not important.
Okay. Done.
Done, sir. Sir, you're muted.
Okay. Sorry. Just wanted to confirm all of you did the question, na?
Yes, sir.
Okay. So I was saying that when we bought the asset and liability from Central Limited, you can see that there is a clear difference on the credit part of the journal entry. Sorry, debit part of the journal entry. That means we bought the net, the asset and net value of the asset and liability that we bought is 14,50,000, but the consideration amount that is agreed between Sandesh Limited and Central Limited is 15 lakh. That means Sandesh Limited have agreed to pay 50,000 in excess of the net value of the asset and liability. So the extra amount that we are paying, this is considered as the goodwill. You can see that the credit on the debit totaling the asset, we will get 650 plus 250. This will be 7 plus 9, 13 plus 2, 15 lakh 50,000. 15 lakh 50,000. And in the credit part, the sum total of the credit is 15 plus 2, 17. 15 plus 2 is 17. I think there is a difference of 1,50,000, I guess. Okay,
Sir,
so
I
this is
got
60, yeah,
50,000.
16 lakh 50,000, yeah. Yeah, right, Alexander, you are right. 16 lakh 50,000 and sum total of this is 17 lakh. So there is a difference of 50,000 which need to be debited to goodwill account. I hope this point is clear, everyone.
Yes, sir.
Okay. After passing the journal entry for the purchase of asset and liability, then we need to make the payment. And as it is given in the question that we will be making the payment of 10% of the consideration amount to check. So for that, the journal entry will be Central Limited account debit to bank account. The 10% of 15 lakh will be 1,50,000 only. And for the remaining amount, we will be issuing the equity shares at a premium of 20%. The remaining amount is 14,50,000, subtracting 1,50,000 after subtracting 1,50,000 out of 15 lakh, we will be getting 13,50,000. Now the thing is that the remaining amount need to be paid to equity share, that is clear, which is given in the question. The problem is how much share we need to issue, how many shares we will be issuing as a part of consideration to Central Limited. For that purpose, again, we will be making small working note for the calculation of number of shares being issued. Number of shares issued. So the amount which is still pending, amount that we need to pay by issuing equity share is 13,50,000. And for this amount, we will be issuing equity share having a face value of 100 each at a premium of 20%. So 20% of 100 will be 20 rupees. So 13 lakh 50,000 divided by 120. So this should be 13 lakh 50,000 divided by 120. is 11,250 shares. What is everyone? Is this clear? Yes or no?
Yes, sir.
So we need to write this here 11,250 multiplying with 100. We will get 11 lakh 2,500 25,000 and 11,250 into 20. This will be 2,25,000. This is how the settlement of the consideration will be made. Sanchar Limited account debit 13,50,000 to equity share capital 11,25,000 and 2,25,000 for the security premium reserve. Got it, everyone? Is this clear, everyone?
Yes.
Yes, sir.
Okay. All right, everyone. Guys, I want you to take the screenshot of this question. This is not question number 20. This should be, I guess, 20 number 1. Question number 21. We just did question number 20, no? Okay, so yeah, this is question number 21. I just messed up with the numbering of the question. Kindly take the screenshot. This will be a homework question. This one is easy. I'm sure all of you will be able to solve it. This is the basic question of the chapter. Let me just read this question once for you. It says Amit Limited was registered with a capital of rupees 5 lakh in shares of rupees 10 each and issued 20,000 shares at a premium of 2 per share, payable as rupees 2 per share on application, 5 per share on allotment, and rupees 2 per share on first call made 3 months later. All the money payable on application and allotment was duly received, but when the first call was made on one shareholder paid the entire balance on his holding of 300 shares. Another shareholder holding 1,000 shares failed to pay the first call money as the journal entries to record the above transaction and show how they will appear in the company's balance sheet. So this is a question based on the calls in area. Remember, we did a topic wherein we discussed a question, wherein we discussed calls in areas. How do we basically treat calls in areas? So you will have to go through that question to solve this question. So this is a type of question based on the calls in area. You will have to revise the previous concept to solve this question. I hope the question is clear, everybody. Anyone having any doubt with this question? I'm giving this question as a homework day. Do you think you'll be able to solve this question? Or at least just give it a try? Because some students don't even try now. I just want all of you to try this question once.
Yes, sir.
Please
We
send
can
me.
try.
Yeah.
Okay, sir.
All right. Apart from this, I'm giving you one more question, which is very, very basic, very easy. And I'm sure you will be able to solve that question as well. In this question, all you need to determine is the authorized capital, issued capital, subscribed capital, called up capital. These things you need to determine in this question. Just a minute. Just a minute. Give me a second. Okay, so I want you to take the screenshot of this question as well. To the given information, you need to just find out the total authorized capital of the company, issued capital, subscribed capital, called up capital, and paid up capital. This is a pretty basic question of the chapter. Alright, so this is it, guys. In the next session, we will be starting a very important topic, which is fourth feature of share. Next class is very important. I would recommend not to miss that class, because that is going to be very important from the examination point of view as well. So make sure you attend the next session itself. All right. So we'll talk more about the company account. We'll discuss few questions based on the core feature, and we'll discuss few other things as well. So this is it for today's session, all of you. If anyone have any doubt, you can ask me. Otherwise, you can leave the session. Mariam, Halima, Alexander, anyone having any doubt? Anyone?